Well. So we ended up seeing the selling pressure for Tesla stock continue to plummet downwards following the report we got today, which was the Q4 2024 delivery numbers, which fell short of Wall Street's expectations. But it's not like I didn't provide a few videos giving the warning that the fundamentals for Tesla were a bit extended, and once we were going to get delivery numbers, we were going to see things look pretty ugly. Now, what makes this a bad hit is this is the first time in over a decade in which Tesla's annual EV sales end up declining, which you could clearly see from this chart from Bloomberg showing the sales stall. Now, there are a plethora of reasons why we're seeing delivery numbers decline, but I want to highlight what Yahoo Finance said, which was that reduced European subsidies, a shift in US towards lower price hybrid vehicles, and tougher competition from China's BYD has pressured Tesla. But in my opinion, while I believe these are the main contributors to what we're seeing take place for the decline in sales for Tesla, I believe there's many other factors that weren't mentioned from Yahoo Finance, which I'm sure you guys watching probably already know, which if you want, you could comment down in the comment section down below. What are your thoughts on why we're seeing EV sales for Tesla decline? Now, I want to go ahead and talk about what I believe is the next area that we want to pay attention to in terms of price action for Tesla. But before I go ahead and highlight that, just a friendly reminder to tap that subscribe button if you haven't done so already, as it really does help out with the channel. But with that said, I want to highlight this chart over here from Mike Zaccardi, who's a chartered market technician as well as a chartered financial analyst. And he pointed out that Tesla's currently in bear market territory as it's down 20% from its December highs. Now, the significance of being in bear market territory is that it carries psychological weight. It may signal to many market participants that Tesla's facing significant headwinds and more selling pressure could end up coming, as well as reduced buying interest. And of course, from a technical perspective, crossing into bear market territory usually suggests a continuation of downward pressure. But of course, the question that everyone has on their mind is, what is the next area for potential relief? And of course, I want to go ahead and break down what I'm seeing currently within the price action for Tesla, and also kind of tying in a macroeconomic perspective, as I like to layer different types of analysis in order to really form an idea of where I think a stock or security is headed to go. But before I go ahead and break that down, just a friendly reminder to hit that like button, because about only 10% of people who watch videos hit the like button. And so if we could bring that up to 20%, that would mean a lot, as it would really benefit the channel. But with that out of the way, I want to share this chart over here of Tesla. And what we see here is highlighted in the green box, an area where there's a lot more volume relative to price. Now, volume relative to price is different from volume relative to time. I say this very often on the channel. When there's a lot of volume relative to price, that means that there's a lot of exchanging between the buyers and the sellers, and that creates these areas of support and resistance. And so what we see here is we're currently in an area where little volume relative to price. And so if there's selling pressure, well, that's where you have those big moves down, because again, there's not this exchanging between buyers and sellers. And so if there's little volume and you have mostly sellers, well, it's just going to bring down the price really fast, right? It's very simple, supply and demand. And so what we see here on this chart is that we have a little bit more volume relative to price, about 9% downwards once we get to the 345 area. But I also want to go ahead and highlight a couple of other interesting things that we're seeing within the economy, as well as what we're seeing from the broader markets. Now, before we actually break down, a technical perspective on those two items, I also want to highlight this tweet or this post I saw on X where someone said, quick comment on Tesla. Tesla's Q4 delivery numbers were slightly below the street's expectations. I see these delivery numbers as solid. My long-term thesis for 2025 anchors off robots, robotaxi, autonomy. The attention deficit crowd clearly does not share my long-term belief in the potential of autonomy and robotics. Let the short-sighted investors move on. Nothing has fundamentally changed. Tesla is still on track to be a $2 trillion company by 2025. Ignore the noise, in which we had Gordon Johnson say, "You are 100% wrong. they'll sell approximately 0 robots in 2025. They are years behind the competition. Human-controlled robots, the ones you see on Tesla's FSD Day, are tech from 1980s Chuck E. Cheese restaurants. Now, generally, I disagree with Gordon Ramsay on a lot of topics in regards to Tesla, as he's one of Tesla's biggest bears. I'm not a Tesla bear, I'm actually a Tesla bull. So there's a lot that I disagree with him on, but I actually agree on what he said in regards to the Chuck E. Cheese comment. Because the truth is, what we ended up seeing from the last event from Tesla, the Robotaxi event, we ended up seeing the humanoid robots, preparing mocktails, dancing with the crowd, and everyone was all excited. There was this euphoria. But the reality, of everything was that these robots were not speaking just on their own. It wasn't fully autonomous. It was actually voice controlled by humans. And then on top of that, they were actually being controlled by humans as well. And so this isn't really superior technology. And a lot of the other robotic humanoid companies out there, especially like Boston Dynamics, are a little bit more advanced in terms of the dexterity that the robots have in comparison to, what the humanoid bots for Tesla has. And so, again, it's kind of very off-putting to say this because I was really excited for the robotic segments of Tesla. However, I was very disappointed, and I think a lot of people ended up seeing kind of the BS in regards to that event, as Tesla stock ended up falling down tremendously after that Robotaxi event, after everyone realized, oh, wait a minute, there's just more empty promises. Nothing has really taken place. And the interesting part is that event was delayed. And so with that delay, there was a higher expectation and it still failed to deliver. But moving on to a technical perspective, looking at the broader markets, we have here RSP, which is the S&P 500 equally weighted. And this is a good gauge on market breadth. So you're usually seeing the S&P 500, just at its weighted average, where you have a lot of the mega tech companies like Apple, Microsoft, Tesla, Amazon, etc., all have a huge weighting in the S&P 500. And so if those few companies perform well, but the majority of the stock market's falling down, you could still see the S&P 500 move up. But then when we're looking at the S&P 500 equally weighted, the RSP, right, that's ticker symbol RSP, what we see is that it's been falling down, right, for a while now. And one of the things I highlighted is that when you see market breadth pretty weak, meaning that the overall market is, pushing up because of the weighted high, tech companies, propping everything up. But pretty much all the other, 500 companies or 490 companies in the S&P 500 are falling down. That means that there's weakness in the market, and that's not a good sign. And we've been seeing in the overall market weakness. And so you combine kind of this disappointment with Tesla with what we're seeing with the, delivery numbers. You add in the weakness from the market, from the market breadth. That's not a good sign. But to add more fire to the fuel, or more fuel to the fire, we end up seeing that the tsla, which is the US dollar index, just hit all-time highs. And now everyone's going to say, well, the dollar going up is really good. However, it's actually not. And this was something I pointed out for those within the Push and Profit private group. So if you're in the private group, then you remember reading one of the daily briefings in which I said that for those unaware, a strong dollar could be good or bad depending on the context and who you're asking. For example, a stronger dollar gives consumers more purchasing power abroad, making imports like foreign goods and travel cheaper. So when the dollar's high, you want to go ahead and travel, right? But one of the things I mentioned for those within the Push and Profit private group was that, however, a strong dollar makes US goods and services more expensive for foreign buyers, and this could reduce demand for exports, hurting companies that rely on international sales. And so a strong dollar kind of has its pros and cons. And so what we're seeing here is the dollar is at these extreme levels. And then on top of that, the 10-year is also another factor. I won't even delve into that because I think it'll make this video a lot longer than it needs to be. But we have a lot of factors. And by the way, the reason why I kind of had the black boxes around everything else I said for the private daily briefing is just because, of course, I try to keep the content that I produce for those within the Push and Profit private group exclusive. So just wanted to point that out. But, there's a lot of factors that are contributing to the market not looking so strong at these current moments. Now, I believe that this is just in the short term. I think we're just having this kind of distribution phase within the markets. I don't think we're going to have the entire market crash. But of course, when you add in these elements in comparison to the performance for Tesla fundamentally, it's not a good look. Now, quick plug for those interested in joining the Push and Profit private group. There is a massive coupon sale that's going to be expiring pretty soon where you could join for 85% off for the first 2 months, which comes out to really just 20 cents per day, which in my opinion is a steal. But don't take my word for it. Of course, I'm gonna go ahead and show you guys one of the testimonies and you guys could just read that. I'll pause it here for you to read. And so if you're interested in joining the Push and Profit private group, make sure to check out the links in the description below. I'll also pin it in the comment section. And with that said, I'll see you guys on this next video right over here. Take care, guys.